Hi, I'm Dean, and I did my advanced accounting senior capstone project on the waste management scandal. Most of you probably know Waste Management has the garbage guys. You've probably seen their trucks picking up your garbage or your neighbor's garbage driving around town. Pretty popular, well known company. Essentially, Waste Management is a waste removal and environmental service company founded in 1968, headquartered in Houston, Texas. They were at the time of the scandal and still are today regarded as one of, if not the largest waste removal services in the United States. The company went public in 1972, and that's important to keep in mind going forward, as publicly traded companies are required to have their financial statements audited. The scandal itself is a pretty interesting story. Top company executives took advantage of a number of factors in order to commit fraud. This was done through accounting malpractices and manipulations in order to make the company seem more profitable on paper than they really were. This led to the misstatement of $1.7 billion in earnings between 1992 and 1997. This was the largest corporate misstatement in history at the time. When the fraud was exposed because new management took over in 1998, certainly there were a lot of consequences. However, I think it's more important to focus on the causes in this case because it's really interesting and important to look at how something like this could have happened and how it could have gone on for so long without people finding out about it. So, out of the long list of causes that led to this scandal, I chose to focus on a select few that I thought were pretty important and played a large role in creating this scandal. Those were corporate greed, a lack of oversight, poor organizational structure, and an unethical relationship with public auditors. Corporate greed really kind of motivated, I think, top executives at Waste Management to commit this fraud. It's no secret. Executives at major corporations are compensated based on how well the firm does. So when the company's profits are going up, stock prices going up, companies doing really well as a whole, making money, that's when the executives are going to be compensated, whether it be through salary or cash bonuses. I think knowing this, top executives at Waste Management thought to themselves, well, if we're in charge of setting the earnings targets and we're in charge of creating the financial statements that say whether or not we beat the earnings targets, why don't we take advantage of this and try to put some extra money in our pockets? And that's just what they did. And when all was said and done, these select few at Waste Management personally profited more than $28 million. It's pretty clear to see while they were setting these earnings targets and coming up with fraudulent financial statements in order to beat these earning targets every quarter, whether or not they actually were going to beat them. The stock price flourished. Clearly, in the 90s when this was going on, the stock price was going up. And as a result, the company was doing really great, making a lot of money. And direct cause from that is the executives are getting a lot of bonuses and making a lot of money as well. Um, and then obviously, when the scandal comes out to the public, stock price drops again before 2000. I think poor organizational structure and a lack of oversight really allowed this scandal to go on for as long as it did. The SEC accredits a lot of the fraud that took place as taking place through top level adjustments, as they call them. Essentially, what these are is every quarter and annually, different divisions and branches of waste management across the nation sent in their financial statements to headquarters in Texas to be consolidated into one big financial statement report for all of waste management. And the people in charge, people receiving these consolidated reports, were the top executives in on the fraud at Waste Management. And it was really a select few people behind closed doors who were kind of adjusting the consolidated financial statements to look however they wanted them to look. There was no real separation of duties. There's no internal controls to ensure they weren't fraudulently misstating the financials, which they were, obviously, because nobody else kind of knew what happened after they sent in their financials to headquarters in Texas. Nobody saw the final product or how the final product was made. Nobody was watching these guys or assisting these guys in creating the financial statements, and as a result, they were able to get away with the fraud for as long as they did with practically no oversight. Uh, which certainly brings us to the Emmanuel College liberal arts connection. We're certainly taught about the ethics while pursuing our BA in accounting at Emmanuel College. Because it is a liberal arts degree with an accounting major, we do have an increased focus on skills like auditing and information systems. which is great because you really get to see the extent and the importance and the effort and the detail that goes into auditing a company and producing an opinion. And you really get to grasp the scope for how important that can be, which only makes you believe even further that the relationship between Waste Management and Arthur Andersen was clearly a disaster waiting to happen. But more so, there was some really interesting accounting practices and accounting manipulations that were used by waste management executives during this fraudulent scheme that are obviously incredibly relevant and have a lot to do with the accounting practices we learned in school. For example, waste management often participated in this process called netting, which is taking the one time sale of an asset and using it to offset an operating expense in the current period. Obviously, you can't do that if the sale of that asset isn't related to the operating expense in the first place. When you sell that asset, you have to attribute that credit to the debit it goes along with. You can't just use that money to go against operating expenses you have in the current period to diminish them. Obviously, that's false. That's not true, and it makes your operating expenses look smaller, which makes the company's profits look bigger. Further, top executives at Waste Management use a process called geography entries. Essentially, what those are moving around line items on the income statement, which you can't do. Obviously, what they were doing is moving around certain assets, certain expenses, certain numbers, switching around debits and credits on the income statement to make the company seem more profitable. Um, a lot of what they did for that was maybe extending the useful life on all their garbage trucks. That way, the garbage trucks as an asset seem way more valuable on paper. You can depreciate them over a longer period of time. Once the assets of the company are perceived as being greater, the company is perceived as being more valuable. It's kind of this vicious cycle that you get into. And while I think those accounting manipulations are, really interesting, and I still think people are always going to take advantage of the rules and laws and guidelines put into place and always try to break them and manipulate them. However, that being said, a lot of the other causes are certainly preventable. You can certainly try to put a stronger emphasis on teaching the importance of ethics in schools and stuff. So maybe when it comes time to make these decisions, these top executives might act more ethically. Further, there needs to be more guidance and more supervision as to how independent the relationship between public auditors and their clients really are. Because obviously, there's a lot of room for malpractice if that relationship is not independent. Further, we know that internal controls and separation of duties are all things as well companies can take steps to do in order to prevent the risk of fraud. Either way, I think we need to look at the kind of things and the factors that cause these giant scandals to happen. We need to look at trying to prevent them and eliminate opportunities for these scandals to happen in the future.